Good morning, everyone, and welcome to Morning Markets. Today we'll be focusing in on the US inflation data from yesterday. As was discussed at the beginning of the week, really this week we'd be focusing on a number of data points, specifically employment, inflation and monetary policy decisions. And clearly yesterday it was very much the US CPI number that was in focus for markets, both in the US but also globally, because of what it can mean for interest rate policy. So if we just look at US consumer prices from yesterday, we saw that the rate of increase was 0.1% month on month, but really more interested in what's happening in that then on a year-on-year basis. That meant that headline inflation was 4% for the month of May, and that was continued to show that decline that we've been discussing over recent months. It was 4.9% in April, and just cast our minds back to last year, last June, when we were at that peak of 9.1%. So really a significant decline in that headline inflation rate in the US, and certainly if you compare that to here in the UK, a very different picture in terms of the speed of decline in the US. A large part of that certainly driven by energy prices. Energy prices, if we look year on year, down double digits for the likes of fuel oil, gasoline or petrol, etc. So really that's driving that headline inflation level down. We've also discussed how we have to focus in on the core, which excludes those more volatile elements of fuel and food. Looking at that, there's a slightly different picture on the inflation trend. That level came in at 5.3% year on year, pretty much unchanged from the level that we had in April. So just really that contrast, that the real driver of bringing inflation down is falling energy prices within that core inflation rate, slightly more sticky. And that speaks to some of the comments that we've been making recently on the challenge of that core level of inflation. One of the key drivers for that really is housing in the US. We haven't seen the fall in housing related costs coming through, maybe as fast as some had been expecting. If we think about housing as a contribution to overall CPI in the US, it's around a third of the inflation basket. And the data that we saw yesterday probably running around 8% in terms of an overall inflation rate. And that really explains why that core level of inflation is staying elevated at 5.3%. However, there's enough within that data to suggest, I think, that we won't see a change from the Federal Reserve when they meet today in terms of interest rate policy. We'll see a pause in the US interest rate coming through there. More interesting probably for the market will be the commentary from the Federal Reserve Chair, Jerome Powell, but also the revised statement of economic projections. There is a possibility that that could show a slightly better growth outlook for the US, just given the more robust start to the year that we've had as well. Speaking on growth, this morning in the UK we've had GDP numbers for the month of April, which showed a minor growth of around 0.2% from March, but really also to think about that follows on from a decline that we saw in March. So a better, slightly better backdrop there. I'll leave it there for today, but please do join us again tomorrow.